Australian beef producers are set to face stiffer competition in their premium market. Japan is about to lift the age limit on beef imported from America from 20 months to 30 months. The 20-month limit grew out of the BSE outbreak back in 2003. Now, the extra 10 months is expected to see at least another 80,000 tonnes of US beef arrive in Japan each year, and it could start to happen within months. Meat and Livestock Australia's Tokyo representative Melanie Brock confirmed the bad news.
More than the 20-month to 30-month protocol and import restriction at the moment, the greater issue of concern for us is, of course, the currency. Now, that's not something that MLA or any beef producer, irrespective of country, can determine. But the very weak US dollar against the yen is causing, the traders and suppliers to sort of consider the US products even at its current restrictions. So there's a lot of pressure on the Australian beef industry in terms of areas where we can't actually bring about any change ourselves, i.e. currency and foreign exchange.
So the 30-month age limit, the increase, will be sort of a double whammy to Australian producers.
Yeah, I'm very sorry to have to bear that message. I'd like to be passing on a very different message.
But in some good news, Ms Brock also told me there's been quite a surge of Japanese interest in grass-fed beef lately, which of course is hardly good news for our lot feeders. Now let's check the prices, and markets are almost back to normal after the flood problems. Restocker demand is easing slightly as a touch of caution comes on the back of market chatter about numbers available when all this feed that's been around for a long time starts to dry off. So trade cattle eased 6 cents and the other indicators were virtually flat. The one consistent report from the sale yards is that the quality of cattle on offer is said to be good to excellent. Now, this left the Eastern Young Cattle Indicator at $3.90, down 3 cents for the week. That is very close to the 5-year average for this key marker. Now, the live trade and the rumour mill is spinning like a top. Latest gossip has more permits from Indonesia, but not until mid-March at the earliest. In the meantime, permits for this quarter have all but gone. The absolute key factor in this live trade debate is the size of the beef herd in Indonesia. Officially at present, it's said to be 15 to 16 million, but I'm told it's actually closer to 5 to 6 million. And as soon as this fact hits home in Jakarta, the live trade can expect some relief. Right now, prices are on the skids, down another 5 cents, $1.85 for steers and $1.70 for heifers. The biggest beef news last week was very big indeed. The Acton family from central Queensland sold their property Moray Downs to an Indian-owned coal company, Adani Mining. Here's the location of Moray Downs, west of Moranbah and south of Charters Towers. Pretty good country, I'm told, 121,000 hectares. Beef Central says it should run about 15,000 head of cattle. And the reported price for Moray Downs, $110 million. And that doesn't include the cattle. $110 million, what can you say, but good luck to the Actons. The strong dollar is putting a lid on sheep exports, and although domestic demand remains firm, prices continue to move south. Numbers were way down last week as producers try and hold on. In fact, lamb yardings were off more than 30%. Now, that mutton price is almost 10% below the 5-year average, and the lamb indicator is actually 25% below the price in this week of last year. To grains now, and I'm afraid the news doesn't get any better. Prices are soft everywhere, the exception being soybeans, which rallied a bit on the back of a poor forecast from Argentina. Of interest would be the American sale last week of wheat to Egypt at $2.59 US a tonne. That's an FOB price, so reasonable prices are around if you can find a buyer. So corn and wheat eased a fraction and soybeans are up 30 cents on the week. Futures trading in Australia saw a further easing. ABARES has confirmed Australia's wheat crop this season at 29.5 million tonnes, a record, and reflected in current prices. WA wheat for March delivery dropped a further $6 last week, while New South Wales wheat fell by a similar amount. The spot market is holding up relatively firm. The canola price reacted to a lift in Winnipeg, while the sheer volume of sorghum available is pushing that price south. And this week of last year, sorghum was fetching $250 a tonne. To New York now for the soft commodities, where sugar continues to move sideways week in and week out. It's now just below 24 cents, and I'm happy to report a price rise. This is for cotton, which actually lifted on the back of keen buying from China. Finally, to all which managed to hang on to recent big gains, exchange rates continue to give both buyers and sellers headaches. But with strong buying from China and support from India and Korea, the market closed virtually as it opened. And of interest for the ultra and superfine growers would have been the presence of Italian buyers for that Launceston sale. So the Eastern Market Indicator closed at 1,244 cents. That's 10 cents less than this week of last year. And that's the Landline check on prices.